If you know something about Chinese electric vehicles, you'll definitely know about NIO because the company has got so many tricks up its sleeve. But what if we told you that NIO stock prices are about to explode very soon? If that caught your attention, stick till the end of the video to know a lot more about NIO. But before we begin, make sure to subscribe to our channel for more content just like this and turn on post notifications so that you never miss out on any of our future uploads. Now, what if we told you that China accounted for about 42% of global new electric vehicle sales in the first half of this year? Well, that says a lot about the Chinese market. Right now, the electric car company NIO controls roughly 3% of the Chinese EV market, and that might not seem huge to a lot of people, but the company is still very new and it does have a long way to go. China's NIO continues to see huge demand for its luxury electric SUVs. During the NIO Day on December 18th, the EV startup might show off their new entry-level ET5 electric sedan. And during the NIO Day, the company might also reveal their brand new mass-market brand, and this could be a catalyst for the NIO stock to have a significant price increase. Now, for those of you who don't know about NIO is a company founded way back in 2014. And back then, NIO had very little experience in vehicle manufacturing. But even then, NIO was referred to as the Tesla of China. But is it right to call NIO the Tesla of China, considering the fact that NIO does not make its own electric cars, but instead they're partnering up with the state-owned auto manufacturers? Well, we'll let you decide that, so drop a comment down below. In the first half of 2021, the global electric vehicle sales grew about 160% compared to 2020. China alone is responsible for about 42% of the 2.6 million electric vehicles sold globally in the first half of this year. And the number of electric vehicles sold in China in just the first half of 2021 is equal to that sold in the country in 2020 in total. So it makes a lot of sense to us that China is clearly the dominant market for electric vehicles, and this market is growing really fast, which is why we have so many Chinese manufacturers that are focusing on electric vehicles, and that's exactly how NIO gets a lot more interesting to so many investors. BYD currently accounts for the highest market share of the Chinese electric vehicle market with about 17% market share, and this 17% also includes the plug-in hybrids. BYD is then followed by a joint venture between SIAC Motors, General Motors, and Liuzhou Wuling Motors, which controls about 16% of the entire market. And then we have the global electric vehicle leader. Yes, you guessed it right, it's Tesla, and the company has got about 11% share in the Chinese electric vehicle market. Chinese electric vehicle sales reached nearly 2 million units. Out of the 2 million newly sold vehicles, about 66,395 vehicles were from NIO, which is about 3.3% of the market share. Undoubtedly, NIO's target has always been the luxury market in China, and the competition is tough, especially with Tesla and startups Li Auto and XPeng. Chinese and US auto giants are also stepping into the luxury electric vehicle market, and those companies also include BYD and Geely. This year is so exciting for BYD because their electric vehicles, including hybrids, are booming rapidly. Just last year, General Motors, Ford, and Volkswagen did launch electric SUVs in China specifically for Chinese consumers. Even after all this tough competition, NIO continues to grow with their EV sales more than double what they had in 2020, and also coming back from the brink of bankruptcy. NIO is completely speeding up their launches with an aim to deliver 3 new products in 2022. This means that we'll be finally getting the first electric sedan and the most high-tech vehicle yet from NIO, which has to be the ET7. The ET7 was unveiled during the last NIO Day, and it was supposed to offer more than 600 miles of range. And you also get so many autonomous driving features with this vehicle, and it's set to launch as early as the first quarter of 2022 in China and by the end of 2022 in Europe and more countries in the future. Right now, you might have noticed that NIO stocks are underperforming. But in the last 2 years, NIO grew its quarterly revenue at an average year-over-year rate of 150%. But in October, the company did report a 27.5% year-over-year drop in vehicle deliveries. This is because of lower production volumes. For the first half of October, NIO was also upgrading their manufacturing lines to prepare for their new products, impacting production volumes. The company was also affected by the global chip shortage and other supply chain issues that affected every other auto manufacturer. So yes, the falling delivery numbers were a concern to many investors, and some of them are also thinking about selling their new stocks. But we think that's a terrible decision, and here's why. NIO stock seems to be trading at a better valuation than newer EV companies like Lucid or Rivian, which have much lower sales than NIO. When you look at the price to sales ratio, NIO has got 12 compared to Tesla's ratio of about 27, and NIO's ratio is also higher than that of a traditional auto manufacturer like BYD. But again, that has always been the case. But Lucid or Rivian stock's price to sales ratio might not be as meaningful as the one we have with NIO. NIO is also looking forward to expanding its product lineup to the ever-growing European market. The company also started their deliveries in Norway, which happens to be a country that is heavily promoting electric vehicles. And NIO is also looking forward to entering the very competitive German market by the end of 2022. We know that electric cars have been very expensive, which is why a lot of people are very hesitant to switch to electric vehicles. But NIO would change things up because the company plans to launch lower-priced models, which will expand its product portfolio and its market share in the near future. Despite all the hurdles that the company faced, NIO successfully carved a space for itself in the very competitive Chinese electric vehicle market. The market seems to be overestimating competition while undervaluing NIO's potential, and NIO looks like a very attractive buy for the long-term investors, so it makes a lot of sense for us to look at the price predictions for the same. Analysts are offering 12-month price forecasts for NIO Inc. with a median target of $58.14, with a high estimate of $87.21 and a low estimate of $27.07. The median estimate represents a plus 81.07% increase from the last price of $32.11 as of the 6th of December. Morgan Stanley analyst Tim Xiao reiterated his buy rating for NIO stock and raised his price target from $64 to $66. Xiao cited the recent rollout of the ET7 model and the upcoming ET5 model as proof that NIO is successfully expanding its market and the better days lie ahead for the stock. And a final note, this video was meant to be infotainment content and should only be viewed as such. So any investments you make must be made at your own risk because the prices of the stock can fluctuate depending on the market sentiments or with some big news. You need to make sure that you invest in assets that you clearly understand and invest the money you're willing to lose. So if you're somebody who's willing to take the risk, you'll be able to make a lot of profit with NIO stocks. That's a wrap for today's video. What do you think about NIO stocks? Do you think electric vehicle stocks will give you massive returns in the future? Do let us know your opinions in the comment section below because we would love to hear from you all. Also, consider subscribing to the channel for more content just like this one and turn on post notifications so that you get notified every time we upload a new video. That's about it for today. I hope you guys enjoyed the video. If you did, make sure to smash that like button and we'll meet again in the very next one, so stay tuned.